You gotta be flipping my flapjacks, folks. Big milestone day here today. Palantir stock hit a 2,000+% gain in the public count. One of only 3 stocks I've ever had in my life that I held long enough to make over 2,000% on. One was Tesla, one was Elf, and Palantir has joined that bunch. If I held Nvidia back in the day long enough, I would have made 2,000+% on Nvidia, but unfortunately that one I sold too early. Unbelievable. Congratulations all Palantir shareholders, and congratulations all SoFi shareholders out there. That stock crossing 22 plus here today. I mean, SoFi is just looking phenomenal. 22.10 here today, now up 166% on that stock. That stock continues to climb. AMD's holding very strong. AMD, you would have thought today would be a day AMD would give back some gains. Nope. Still ended up finishing green. AMD shareholders continue to do very well. We're now up $124,000 in the public count on AMD stock. I posted this on my X page, by the way, if you ever want to follow me on X. It's always linked in the description area down there. I posted this a few hours before Netflix earnings came out. I said, Netflix is reporting after the bell. Everyone's expecting the stock to boom when earnings come out due to Squid Games. Numbers should be great. The most stock market thing the stock market could do is have the stock go down after earnings come out. And sure enough, the stock ended up going down after hours. That's the stock market being the stock market. Home builders are slashing prices at the highest rate in 3 years. What a power change, folks. What a power change. These home builders had all the leverage on folks, for the last few years, but not anymore. And so now, if you're out there looking to buy a new home, hey, you actually have the power in your hands to negotiate for the first time in a long time, right? Listen, yesterday on the main channel, I let everybody know only 7% of people hit the thumbs up button. And people balled out yesterday, and we got over 10% of the video viewers on the main channel yesterday to hit the thumbs up. Can we do that on the reaction channel here today? I hope we can. I appreciate y'all for doing that, okay? If we can hit more than 10%, let's beat the main channel, okay? The main channel, can run the math on that. What are they at? 13% or roughly or so? About 13% of people that watch the video hit the thumbs up. We got to beat that, folks. We got to beat that. Come on. We can do like a 15% number, maybe even a 20% number here on the reaction channel. And if you don't do it for that reason, do it for the reason that I got down on my goal weight. Okay, 189 pounds weighed in this morning. Very, very thrilled with that. I was 189 before I went on vacation to Mexico, but you know what happened? I ate way too much when I was down there in Mexico. Drank way too much. Not liquor. Too many sugar drinks, okay? And next thing you know, I came back, I was 195, and I'm like, dang, what the heck? And so I spent the last few weeks trying to cut, got down to 189. So I'm a happy camper. Now, in today's video, folks, we have some things to react to. One is a message I sent to my Prep Stock Group members on an important subject I want to talk about. From there, I want to react to this one. Small cap market is starting to show signs of life, says Goldman Sachs. Looking forward to getting into that one. Adam Pitapaka thinks it's reasonable to expect market growth of 9 to 11% thanks to AI. Looking forward to reacting to that one. And Josh Brown gives the okay to trim Nvidia. Wow, that's a big statement. So really looking forward to getting into that last video around Josh Brown and some of the investment committee and their opinions, perspectives on everything there, okay? Alrighty, guys. So, by the way, if you're not subscribed to the channel and you want to subscribe to the channel, you can certainly do that. I think we're at, how many subscribers are we at now? 101,000, I think, here on the reaction channel, somewhere around here, okay? All right, so first off, this is a message I want to get out there a lot, okay? I said, I saw a post today of a millennial complaining about how millennials can't afford homes. Previous generations could afford homes, blah, 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 right? Same stuff I've been hearing, by the way, for 15 years now at this point in time, right? I said, when do people start to take accountability? Every female I know under 40 expects to get a mani-pedi every month. To get your nails done used to be for special occasions only, not every month or every 2 weeks. Many guys I know want to get a haircut every few weeks from their barber. It's got to be their barber specifically, so their hair can look perfect all the time, right? People always ragging on me because my hair is always all messy or whatever, right? I know these guys all want their hair all perfect all the time, right? Almost all the guys I know wear fancy watches. You think my granddad gave an F what his hair looked like, or if he was wearing a Rolex or not when he went into the asbestos factory my granddad used to work for, Johns Manville, who used to manufacture asbestos. I said everyone wants to have a $1,000 smartphone, a $1,000 plus computer, $400 smartwatch, $100 gym membership. Oh, and let's stop for a $7 Starbucks or Dutch Bros drink on the way before work every day. My parents surely didn't go for a $7 coffee before work every day. When they're going to clean homes and pools, they would make a pot of coffee at the house for 20 cents. Then people go to Chipotle or whatever to spend $10 to $20 on lunch break. My dad and his dad would take their own lunch to work in a cooler, a bologna sandwich, a ham sandwich, like something simple that's super cheap, right? Fraction of the cost. People go out to eat all the time at a $100 restaurant. Going out to eat used to be like a thing that only like the rich people did, right? Or if you were like, middle class, you did that on like a special occasion. You didn't go out to eat on the regular. That was not a thing, okay, until like the most recent generations. People spend like they're rich when they're not rich. They wonder why they feel poor and can't afford a home. After all this, people wonder why they have little money left or no money left at the end of each paycheck. I wish people would look in the mirror instead of, the much easier thing, which is blaming on the system, right? It's the system's out to get us. We can't afford a home. It's because of the system, right? The system. And I'm just like, people want to live this lifestyle that no previous generations lived, while still getting all the benefits of the previous generation. So they look at the previous generation and say, man, they used to be able to, they could afford a home, right? My granddad, he had a home. I live in an apartment. Your granddaddy, I'm sorry, he wasn't, you know what he did when he got done work? He then went to do his side business, or he went home. He didn't go spend money. He didn't go out to eat. He wasn't out there spending $20 at lunch. He wasn't out there getting freaking mocha frappuccinos. He wasn't out there getting a 3-day pass to Coachella. You know what both my grandmas did? They were around the house all the time, trying to fix it up, planting gardens, cooking, reading books. They weren't out there, getting their hair done. They weren't out there, getting mani-pedis and all this stuff. And they weren't out there getting plastic surgery and getting BBLs. My grandmas, they weren't doing that. But this generation is different. Like, we expect to get all these luxuries of life. And the thing is, like, people aren't even in the financial situation to get all these luxuries, right? And they're like, complain about they live in a 1-bedroom apartment and how they can't afford a house, and they got a 3-day pass to Coachella. Like, what are we doing here? Like, yeah, our parents and grandparents weren't doing that. Like, what are we talking about here? And so, when I was on the come up game for money, right? You know what I used to do? I used to go to Walmart. That was where I would shop back in the day, right? And I would try to always keep my budget around $40 to $50 a week. That's total for grocery shopping. And you know what I'd get a ton of? Vegetables. You know why? Vegetables, they have a lot of good nutrients in them, and they're very cheap. And vitamins and all those sorts of things. So I'd buy iceberg lettuce. I'd buy carrots, celery, cucumbers, other vegetables. I'd buy ham, cheap, cut that up. And then I'd buy cheese, chop that up. And I'd make a bunch of individual salads, which is, I guess people have a fancy term for meal prep now, they call it. I would do meal prep like before meal prep was a thing. And I would take that to work. And based upon my budget, I would be able to make those. And they were very good quality salads in with the ranch as well. I think it was for around $1 a bowl, roughly, versus, other people would spend $5, $10 on lunch at that particular time. Nowadays, people spend $10, $15, $20 on lunch, right? And I'd have a very good quality lunch. And it's about finding those sorts of things. And then when you get to the big money, then you can spend. Then you can spend like that because your investments make you so much money that it's fine at that point in time, right? People want to come to Vegas and rent a Lamborghini or a Ferrari. And, they spend $500 at the club. They spend $1,000 on a rented, Ferrari or Lamborghini for the day. I'm like, the first time I already decided in my life, the first time I was ever going to drive a Ferrari or a Lamborghini was when I owned one. And that stayed true. I never drove a Ferrari or Lamborghini until I actually owned one. And that's how you got to think, man. And so, people want to live this crazy, like, rich lifestyle that previous generations would laugh at. Talk to your grandparents about all the stuff you do nowadays. That they couldn't even imagine doing all this stuff. Like, what? Spending all this money that you guys spend money on nowadays? Like, that's crazy. And so when you guys see the millennials complaining and then the next generation, the Gen Zs complaining about, I can't afford a house, remind them of this. Because every damn time I ever watch a festival on YouTube or something, these festivals are like, it's like $500, $1,000, $1,500. It's a whole bunch of young people out there dancing around, having a great time. Cool. But then don't go complain about you can't afford a house because you spent $1,000 on a 3-day festival. Okay? Hey, don't go complain about this and that because you spend all your money at freaking, you got a $100 a month budget at Starbucks and you got a fancy gym membership. You pay, I know people that pay $300 for a gym membership. $300. It's free to go run. You could go run anywhere you want for free. You can do as many push-ups as you want for free. You can do as many squats as you want for free. You can do as many lunges as you want for free. For free. Go play basketball at the park. Dude, this is all free. And people out here paying $300 for a membership. That's fine. If you're a baller, you got money like that, go spend $300 on gym membership. That's fine. But people out here like that aren't even in that financial position are out there spending money like that. What are we doing? And then I live in an apartment, can't afford a house. System's out to get me. Somebody give me a mocha frappuccino. Oh, gosh, man. So guys, we got to start calling this out when you see this type of crap on social media, because you'll see it everywhere. You'll see it on Reddit, people complain about stuff like this. You'll see it on X, you'll see it on TikTok, you'll see it on Instagram, you'll see it on Facebook. Can't afford a house. And then look at this. There's another great post. Andre actually sent me this one. I love this one. This is average house and household size in the United States. And this is what it's gone up. Back in, 1850, average house was 888 square feet. And you had, 5.5 people on average living in a house at that particular time, right? Fast forward to 1910, 945 square feet, 4.5 people on average live in a house. 1970, you had a little over 3 people living in a house and 1,500 square feet. Now we're down to 2.5 people and the average house size, 2,500 square feet. So we want to live larger than ever. We want to live more grand than ever, right? We want to do all this stuff that previous generations couldn't even imagine doing all this stuff and all these treats and all this blah, blah, blah. And then we're complaining? Like, that's just wild, man. That's just wild. Why? Oh, all right, let's react to some videos.
Greg, it's good to see you. Thanks for having me, Carl.
Oh, and then on top of that, people refuse to put in time to learn investing. Think about that for a moment. Like, if that wasn't enough, and people just spend like drunken sailors out here, right? We had people that refuse to learn investing. They'd rather gamble at the casino or gamble on sports or whatever. There's so much money to be made in investing. There's so much money to be made. More money than you could ever have dreamt. But yet people refuse to spend the time on that because that cuts into their TikTok time. That cuts into their Netflix time. I don't want to... You're going to tell me I got to watch all these videos and learn income statements and balance sheets and how to value a stock and run projections and... this sounds like a lot of work. And then you complain because you can't afford the lifestyle you want to live? What are we doing here? What are we doing? We got to start calling this stuff out, people. We got to start calling this stuff out.
To that discussion about how the index is problematic, but you guys still think there are opportunities within it, right?
We do. And I think that, we're starting to see some signs of life in the small cap market, as you mentioned. It's been a good month to date for small versus large. We think that's a reflection of a number of things. There's some catalysts in the stocks, but they are extraordinarily cheap, and the underlying economic environment is quite good. And, I think as we set our sights on the Fed cutting rates in the back half of the year, you have a couple of tailwinds. So
I was going to say, big themed thematics, economic activity, right? You mentioned the Fed, and then M&A universe broadening out. Does that help?
It helps out a lot, and I think it's been very quiet this year, a lot more quiet than we would have expected. You've heard from all the bank CEOs, including ours, who was on TV with you guys. Thank you. That M&A is big backlogs are building. We expect that to kind of be materialized in the second half of the year. Private equity will start to move, and then we'll start to see more strategics. We've had a couple of strategic deals this week, but not as many as we expect.
Right. So you talk about catalysts within the area. Is it consumer first, financials first, something else?
I think consumer has been the kind of what has carried us to this point. The consumer came into the year as being a big question mark. Would they continue to spend? Where would they spend? And you even heard this week that they're starting to spend on air travel again. So I think you have to start to see a handoff to some other sectors. We're pretty encouraged about tech, software, semiconductors would be an area that I think can take a nice handoff. But also aerospace and defense has done quite well. And we expect to see some more IPO activity in that space because space is quite active. The private side of the space sector is quite active right now.
Yeah, even the big guys, GE today talked about getting that defense business going. We had leisure hospitality ETF hit an all-time high today. Individual names, I'm looking. There's some consumer restaurant stuff you like.
Yes.
Yeah. Cake.
Cheesecake Factory we like a lot. It's become a Gen Z.
Hey, let's go, baby. Love the cake. And by the way, this is why I love that everybody's addicted to spending every penny that comes through the door, because this is what helps the economy go. It just is. You know, the fact that everybody wants to spend every dime on everything but buying a house, like, shoot, that keeps Cheesecake Factory packed all the time. That keeps Flower Child packed. Like, no one has to go eat at the Cheesecake Factory. It's not like that's a necessary thing. No one has to go eat at Flower Child. No one has to go eat at North Italia, but they gladly do. And they line up, and they'll wait an hour for a table just to get in there. No one has to do that. I appreciate it, man. I love that everybody loves to spend every money. It just makes more money for all my companies. But cheesecake, man, I can't believe. Look at this. How far has Cheesecake come to get a mention on the closing bell? Come on, man.
Yes.
Yeah, cake.
Cheesecake Factory we like a lot. It's become a Gen Z hotspot. Want my youngest daughter to get a second job there. But I do think that there's some really good trends for traffic that will go on for Cheesecake throughout the summer.
Oh my gosh. Dude, no way. No freaking way. Man just brought up Cheesecake, and all he did was talk about Cheesecake Factory. That's not even the biggest story with this stock. That's not even the biggest story. The biggest story is North Italia and Flower Child and all the concepts they have coming behind that and the growth there. This proves to me that people still don't understand the cheesecake story on Wall Street. Like, the first thing you should start talking about is not even around Cheesecake Factory. Who cares? Like, Cheesecake Factory is an ATM machine. Like, this is going to keep printing money. Like, that is what it is. People love Cheesecake Factory. They gladly wait an hour for a table, and that's just boom. Like, they put up their numbers. There's no story there. It's just an ATM machine of a business. The whole story with cake is around Flower Child, North Italia, and the other concepts come behind it. That's the whole story. Like, and this just shows me that people still on, the Wall Streeters, they still don't understand the stock. And my gosh, when they start to actually understand everything that's actually going on with cake, look out, $100 incoming.
What explains that?
Piper will be an M&A story, along with just the general capital markets recovery, along with a pretty solid underlying, municipal bond business.
Voyager. I don't know too much about that one.
It's a recent IPO, very heavily on the space side. So you think about, like, as the space market starts to broaden out post, after SpaceX, they do a lot on launch vehicles and other things in space.
Do you worry about funding costs? I mean, at least for the time being, if the Fed does stay more patient than we think it's going to?
They've been high for so long that most of our companies have had to adjust. So I think that maybe there could be some companies at the index level that could have some problems. But for the companies that we own, we think that they're in really good shape. Rates have been high for almost 3 years, so it's, you think you get used to it after a while.
Right. There's also the added notion that as trade gets limited by tariffs and just overall tensions, that you want more pure plays domestically. That makes some sense, doesn't it?
That's a great tagline for small caps, and we love it because we do think the domesticity of the asset class, and having been through this tariff challenge before, many of these companies are really focused on the U.S. market. It costs a lot to go overseas. It costs even more to source overseas if you think about the challenges of 2017, 2018, the first tariff challenge, and then COVID. A lot of these guys really tightened up their supply chains. So we think that they are very focused on the domestic market.
Goldman had a great chart today looking at prime net exposure to semis versus software. We've talked a lot about how hardware has sort of stolen that mantle from some elements of software. But how does that play into a smaller mid-cap story?
I think we don't get the buzz from the biggest semiconductors that we all know drive the market. But there are a lot of these picks and shovels that are out there that really can help the connectivity, connecting these data centers together. We like a company called SciTime that does that. And there's a number of other companies that are kind of really broadening out some of the connectivity between the different sort of AI hubs inside a data center. You have to connect these things together to get the best use out of the different compute loads that you're putting on them. So there's a lot of picks and shovel semis that are out there in the small cap market that are benefiting from what's happening in the biggest companies.
Right.
Yeah, the ones that are making the most bank for the next, we can call it 2 years, are for sure the semiconductor companies like NVIDIA, AMD. These guys are just making so much money for the next couple of years here, right? And they'll continue to make a lot of money even past the next 2 years. But if you want to talk about who's really going to make the big money the next 20 years, that's going to be plays on companies that are actually buying all these NVIDIA chips and all these AMD chips over this next few years. They're going to be the ones that really end up making so much money off of all this, okay? So that's important to remember. And by the way, you know what the best thing Cake could do for their stock price? The best thing Cake could do, honestly, is they got to start opening a bunch of flower childs in Manhattan and also some North Italias as well. So then at least these Wall Streeters can start to see it in their own playground and be like, because I feel like when Chipotle started to open in New York City, Wall Streeters suddenly started to get it because it was like right there in front of them. And they're like, oh, this Chipotle is pretty good. Like, I like this. Like, what is this company all about, right? And the funniest thing is like the same thing even with Shake Shack. Same exact thing. Shake Shacks were open in New York. Wall Streeters were able to get behind it very easily. And then if we want to take it a step further, even recently with the company named Cava, Cava's in New York City as well. And people are able, all these Wall Streeters are able to go there and see it and like, I like this place. And they pay some crazy valuation. If Cake wants to really accelerate the stock price, start opening flower childs in North Italia. You probably won't get best return on investment from those locations because Manhattan's so expensive to open restaurants. But it'll give them a lot of visibility with the Wall Streeters, and then people will be like, "Who owns this North Italia? Who owns this flower child?" And next thing you know, they'll look into it a little more and they're like, "Wait, Cake owns this?" And they'll start like, "Oh man, you got to put it right in front of their face." Adam Peter Parker.
NBC contributor. AP, it's great to have you.
Thanks for having me. Good to see you.
Nice afternoon with plenty to talk about as we're approaching session highs here. I want to start with a great note you wrote over the weekend. We basically are unrolling the possibility of S&P 10K by the end of the decade based on a lot of the things you're hearing now from, say, tech companies.
It sounds like one of those crazy things where it's 6301 and you think, God, 10,000, this is one of these uber bullish idiots that comes on CNBC type of thing. But when you do the math, long-term S&P's grown earnings about 8.6% per year for the last 50 years. I think it's reasonable to assume that with all the AI investment that's happening, we could get 9 to 11% growth for a few stretch here and get us a little bit above the long-term average. And if you kind of take the price to earnings that we're paying around now, that gets you 2030 on 2031 numbers gets you around 10,000. So it was just to kind of get people. I think the reason the market's been very resilient is because all the investment that happened in AI, we were always told it was going to be kind of a 3 to 4 year before we started seeing it. So one of the things I'm watching, do we start seeing any companies talking about productivity? Microsoft flashed a little last week saying, hey, we save $500 million here. And I think in the next 12 to 18 months, we're going to see more and more of that, and people are going to start thinking, all right, well, earnings can grow 10% in the next couple of years.
So we'd be moving beyond the build-out per se and starting to get some of that return on investment?
I think that's right, and I think if we don't get it, then we're going to have a correction in the market. I think we've seen enough CapEx from the big companies. So what we do at Trivera is we search every earnings call transcript for any mention of anything related to, hey, we think we can grow our revenue without a lot of net hiring, or we're getting better at predicting our employee behavior or our customer behavior. And the kind of stocks that have worked have been ones where they have low margins, lots of employees. Look at Walmart's multiple and Costco's multiple, and even like in drug distribution, McKesson or whatever. Like these stocks have started to go up not because they're not high margin. They're low, but I can dream of margin expansion, and that's how I get the multiple expansion.
Right.
Yeah.
True. At the same time, we do have sort of the construction element still in place. Caterpillar today, Eaton, you name it. GE, a good story once again.
Yeah, I mean, if you can take your net margin from 2% to 4%, double, baby, double.
Totally. I mean, one of the things that maybe isn't obvious to people because the market, as you said, is basically at highs. 5 of the 11 gig sectors have down earnings year over year in the second quarter. So it's not like every single part of the market's, materials, and not everything's clicking on full cylinders. So if we solely get some economic improvement in the industrial side, even if the consumer a tiny bit slows, we'll just get other things working. I think the other thing that is a little bit weird about the S&P, maybe not everyone gets, is...
By the way, as we are now get record highs at 6303.
Yeah, right there, right. So 58% of the S&P is 3 sectors: tech, comm services, and financials. So if you're bullish on the market, you kind of have to own a chunk of those 3. That's the biggest 3 sectors have been in over 25 years. Right, so everyone wants to talk about breadth, but what do you mean? Like the market's concentrated in those 3 sectors and they're big. 4 sectors, utilities, energy, REITs, materials, are less than 9% of the S&P, all combined. So, you can go crazy if you're trying to beat the S&P and own a lot of one of those sectors, but you still own way less than you do in tech. You're going to own way more tech no matter what.
Right.
Yeah.
Still, though, people were looking today at the triple Qs versus the SPY, right? That spread's widening a bit, is it not?
Yeah, I think tech has just so much potential here in the next 2 or 3 years to grow. I mean, if earnings grow 10% a year the next 2 years, do you want to be negative on tech? I mean, that's kind of how I look at it. Like, I just got back from being in London and talking to a lot of European investors, and I think they look at the U.S. and just think, well, the market's expensive versus its history, margins are high, and I want to own something else. And I kind of want to say, yeah, if you go to any perspective on it, like I was going to say, if you go to like a Motel 6, it's cheaper than the Four Seasons. Well, that's because it's worse, right? Like you have to adjust for the fact that there's something somewhat inferior about the set of companies that they have there. Here in the U.S., there's just a lot of high margin businesses growing faster. So I don't think it's the end of U.S. exceptionalism. I like the U.S. tech sector. I think the financials are in great shape. And probably the most contrarian call we have at Tribarian is our overweight healthcare call, where I do get a lot of pushback on, will the AI productivity stuff hit in the next 6 months, or is it more, hey, 5 years from now and it's too early to get in front of that?
Are you talking hospitals, pharma, insurers? Which part?
I think there'll be a sequence. I think drug distribution, diagnostics, hospitals will benefit earlier, tools, and then in the medium term, it'll probably be, more like the drug development side. But I kind of look at it and say, and not everyone maybe knows this, healthcare revenue per share for the S&P 500 has grown at least 25 years in a row every year. Right, during COVID, during the financial crisis, there's a lot of old people. They demand services, tools, diagnostics, testing, hospitalization, managed care. So you have somewhat steadier revenue. There are big fears. Obviously, when we're running at a wartime deficit in the U.S., maybe they cut back on healthcare spending, do get rid of drug rebates, et cetera. But I just look at it and think, if you and I were sitting on top of the S&P and we said, where would we focus our efforts for AI? We'd say, where there are lots of employees, where there are low margins and lots of revenue, and let's go there. And so many of those are healthcare companies. So that's why I think it's not like they're all awesome, they're bad, and there's opportunity for improvement that gets me more excited.
So this is actually a really interesting thought. Let me pull up something for you guys and show you something here. All right, so something very important he just talked about there was looking at companies that maybe are very low margin right now and might be able to increase their margin quite dramatically over the next few years due to, let's say, something like AI, right? So, there's two companies that kind of came to mind here. Oh my gosh, Palantir's valuation. There's a couple companies that came to mind that I usually think of when I think about kind of like big revenue companies, but man, it's hard for them to hit anything down that bottom line. It's companies like UPS and FedEx. And so if we look at both those companies, right, UPS looks like it's around a 6% net margin. FedEx looks like around 4% net margin. Companies like that, I even think about like, man, could those companies benefit a lot from, let's say, AI and robotics over the next 10, 20 years? And it's like, it's very possible. If AI can streamline the businesses better, make them even more profitable, and then we could talk about robotics being more involved or autonomous vehicles or things like that, right? There's a lot of innovation that's going on there right now that maybe a lot of that technology ends up being a big catalyst for UPS and FedEx and companies like that to maybe increase their margins over time to maybe like a 10% number. But the pushback I'd give on that is that's dangerous to just assume these companies will be able to, bring those margins up substantially. They might not, so you can't bet the farm on that.
Individual person watching this and for every portfolio manager, unfortunately, I don't have advice that would cover the gamut of what everyone's trying to do. But one of the things that I think is very obvious is now is not the time to be getting more bullish than you were a month ago or 6 weeks ago. Now is the time to maybe say, okay, I've had a good run. I have a bunch of stocks that are up double digits in a very short period of time. And do I still want to have as much exposure as I did when valuations were lower and there was less enthusiasm priced into these names? And for some of you, you'll say, you know what, actually, I haven't thought about that in a while, but maybe I don't want to have a 5% position that just went to 8%. And it's not the same as saying, oh, we're about to have a correction, and I predict that it starts in 27 hours. It's just a recognition that this has been an amazing market to be involved with, and a lot of stocks have probably outgrown the original size that you put them on in your portfolio, and you might want to make some decisions right now about if today were the starting point, how do I want to be allocated going forward?
Joe, coming over to you. So far, very early goings, but earnings season actually going better than expected.
So what do I think about what he said there? My opinion is, I think he's 100%. I think he's 100% on. There's nothing wrong with taking some profits this summer. There might be some stocks you hold that have just gotten to ridiculous valuations, right? You see me, I'm taking profits on Palantir right now, and I plan to continue to. The higher that stock goes in the next, 2-3 months, the more I'm going to sell until I get down to 1,000 shares, and then I'll likely just hold that 1,000 like super long term. And if it becomes a multi-trillion-dollar company or something like that, great. And that's cool. But I think that's a really dangerous stock at this stage of the market. And so, given the valuation the company's at, so I'm like, I'll take a lot of my profits. I've already sold most of my Palantir. I got another 500 shares I want to queue up and get rid of those, and then I'm good, right? And so there's some stocks you'll hold that. I got rid of my Tesla as well. Tesla's another one that the valuation just doesn't make sense given where the business model's at, in my opinion. And so sometimes you just get in those situations like let's cut some. And that's fine. Like this, that's part of the game. Part of the game of the stock market is selling, right? Most of the time you should be buying and holding. But there's going to be some times when you do sell, right? And those times should be few and far between, but in time periods when the market's been great. I mean, the market's been great now for getting close to 3 years. We're already, late July now? We're already kind of moving toward, mid to late July. And, the market bottomed in October. If I recall, it was October 2022, so we're not that far. So that means the market's going to be in a great for almost 3 years. Now, along that way, we've had plenty of corrections and pullbacks and things like that, including the major correction earlier this year. But if you just look at a longer-term trend, we've been in a pretty outstanding bull market for almost 3 straight years now. So the market was phenomenal in 2023. The market was phenomenal in 2024. And so far in 2025, it's been a phenomenal market. Like, look at where we started the year for the S&P 500. Look where we started the year for the Qs. Look where a lot of these stocks started the year. Look where these stocks are now. And if this market continues to go higher and higher and higher from here over this next couple months, if it depends on the stock. You got to take it stock by stock. Some make sense to take some profit, some don't.
The estimate was 5.7, so that's 6.5 according to LSEG. Right now, do you want to just continue?
It's like AMD. Am I interested in taking profits on AMD? Absolutely not. Am I interested in taking profits on Palantir? Absolutely. Those are two very different situations, two very different stocks in regards to where they're at in their stock cycle, their business model, everything like that.
Your winners into earnings, or is it time to take a few bucks off the table and reposition a bit?
Well, I'm going to reiterate what Josh said. It's a little bit difficult to give a very succinct answer to that, but I'll do my best in an attempt. I think if you believe this is some form of an inflection point, something similar that we've seen on a secular basis, maybe in 2000, 2007, then for sure, it's definitely a moment where you want to take action in the portfolio. If this is nothing more in the upcoming quarter than a quarter in which maybe the S&P is flat to slightly down because we have a September 17th Federal Reserve meeting, you have a lot of issuance coming, the long end of the curve is backing up. Okay, you just kind of set an expectation for yourself and you say, this quarter is not going to look like the previous quarter. And if I want to do some minor selling, trimming some positions, I have no problem with that. But I'm going to stay anchored with the positions that I have. I think the risk in believing that this is some form of an inflection point, number one, is that you are going to get that rate cut in the fall. The earnings, as you mentioned, Frank, are very strong. And then just lastly, I do a lot of pattern matching. If you go back, you have to remember we had the precipitous decline already this year. We had it in the spring. Go back and pattern match the period from spring of 2018 through the end of 2019. And you'll see that precipitous decline in the fall of 2018. On the other side of that, you had a very steady staircase move higher.
Oh, you already know what I'm laughing at. You already know what I'm laughing at. Whenever I hear these guys bring up the fall of 2018, it just cracks me up because, man, you know how many times I talked about that the past 6 months.
This pattern match to that time period is very high. That's potentially what we're setting up for right now. So I think you stay anchored and just set the expectation that maybe Q3 doesn't look as good as the prior quarter.
All right, just put this all in context. If we're going from the April lows, Nasdaq's up more than 35%. The S&P's up more than 25%. The Dow's up just about 18%. I want to come over to Bill Baruch. I don't have to ask you, Bill. I know what you're doing. You're actually taking some money off the table. Why don't we start off with you trimming the triple Qs? What's the rationale behind that?
Listen, I think earnings are going to be good, but remember how you felt and what the market was going through in early April. And, this is why you take risks like we did in April, and you monetize it right here. We're trimming things, bringing back to balance, creating a little bit of cash. Gives us a little flexibility as we go through earnings season. And, I think there's just going to be some churn here. We're gearing for maybe a record high close in the S&P today. But I think could be some churn as the market kind of just digests things. I don't think, as Joe said, it's going to accelerate. But I do remain overall bullish. I'm not sitting here bearish, but this is just tactically raising some cash.
Goldman actually out with a note talking about some of the moves that you're making, or at least referencing a possible move similar to the ones you're making. I'm going to read part of it. The average tech stock in the S&P is implying an earnings day move of under 5%, the lowest in 2 decades, suggesting complacent setup and lower probability of relief rallies. They're recommending hedging tech exposure with XLK puts or buying puts on stocks with high earnings revision risk. Agreeing with this strategy?
Well, here's the thing. If you're buying puts, you're spending money. Now, you can really protect your downside, and there's times to hedge. In 2022, we hedged our downside and used puts. The Fed said they're going to drive the market lower. I don't see this really being the instance here. We could get a nice little flush down. I don't think it could last very long, but if the market pulls back, I want to be able to get cash to work. I do agree with Joe. There's really some great pattern match. I've been going back a couple months ago in May saying this party like it's 2019, and we're going to see a tremendous bull market in the second half, but I do think we have to work through the digestion of the run. And earnings, they're going to be good. Beats and raises are expected, but how many quarters have we seen, maybe not in May, that May was one where the expectations were low and that reinvigorated the bull market. Tech came in with the AI spend, but how many quarters have we seen in 24 and 23 where the expectations were high and the beats and raises, they came, but the stocks did not accelerate higher? We could.
Yeah, the thing, you don't have to be scared of, a 1 to 3 month pull down for the stock market. That happens all the time. Put me to sleep. The one you got to be scared of is when we have a market that goes down for 1 to 2 years straight. That's the brutal one. That's where you could see the stock market, go down 40 or 50%, right? Those are the painful ones. And it's like just 18 straight months, 24 months of just damage. And the market just goes lower and stocks just go lower, and that's brutal. And at some point, we're going to have one of those markets again. It's not like, we're always going to avoid one of those. No, at some point, we'll get a 1 to 2 year downdraft, and it's going to be brutal. It's going to be vicious for a lot of investors going. That's the one you got to be scared for. But in order for that to happen, you really need the economy to tank hard. You really need earnings to fall off a cliff. When does that happen? That's the debate, right? And that's a tough thing. So at the end of the day, you take some profits when stocks get rich. And, you take advantage of great deals out there every week. I'm buying every single week, regardless if there's a bear market, bull market, kangaroo market, all those sorts of things. And if you need help understanding, if a stock's at a place that it makes sense to take profits or it makes sense to buy, things like that, I teach all that sort of stuff and exactly how I identify an opportunity of like the stock's a great buy or the stock says time to sell, things like that. I teach all that in all of my different course curriculums. If you want to access that, pin comment down there, click on that, fill out a form. We'll get you access inside my private stock group, my private wealth group, our Discord chat, 1000xstocks.com, so you can run your projections on a stock. That helps you out so much, especially as intermediate projections. This helps you out so much when you're trying to figure out, is it a stock a good price to buy? Is it a good time to sell? Those sorts of things. When you run your projections and you know how to do this, that helps so immensely in terms of taking the weight off your shoulders, like realizing, this makes sense. Every time I go to sell a stock, I'm not stressing over it because I already realize like it's likely a good opportunity because I do my projections. Here's what a fair P would be for the stock. Here's what's likely to happen with their revenue growth, EPS growth, and I run my different scenarios. And like Palantir, I run my scenarios right now, and it says it makes sense to sell Palantir right now, right? If I ran my projections years ago, guess what it said? Buy Palantir. That was when the stock was $7, not $150 something, right? A lot of things have changed over the past few years. Alrighty, guys. Appreciate you joining me as always. Much love. And yeah, once again, if you're looking to apply to join private stock group, that will be the pinned comment down there. Click on that, fill out a form. Much love and have a great day.